Shopify reported quarterly financial results on August 6, 2025, and investors are asking me to evaluate those results and update my recommendation for Shopify and let them know if it's a buy, hold, or sell. So that's what I'll do here in this video. I'll share with you the big picture takeaways from the company's quarterly results, and I'll share with you my updated proprietary discounted cash flow valuation for Shopify stock, which I incorporated the new results and upgraded the cash flow. And that resulted in an increase in the intrinsic value or the fair value of Shopify stock, which I'll share with you in this video. And then I'll give you my conclusion whether I think it's a buy, hold, or sell. Let's jump in.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
Let's start with Shopify's management comments. The management team said Shopify delivered another outstanding quarter with both GMV, which stands for gross merchandise value, and revenue growth rates accelerating in North America, Europe, and Asia Pacific quarter over quarter. I always like to see companies accelerating revenue growth. That's not very common nowadays because the economy worldwide is decelerating, right? Economic output in 2025 is likely to be, the growth rate is likely to be lower than in 2024. And the main reason being the tariffs implemented by President Donald Trump and the United States. That's going to slow down worldwide economic output, including the output in the United States, in an attempt to rebalance the trade flows around the world, in an attempt to bring back some manufacturing jobs in the United States. So already in the first half of the year, we saw slower growth in the United States than we saw in the first half of last year and in the previous 2 quarters. And then in countries like Canada and China, you're likely to see output slow down even more than you're seeing in the United States because so many countries around the world, including Canada, Mexico, Japan, South Korea, the EU, China, Vietnam, etc., depend on exporting their products to the United States. The United States consumer is the favorite consumer in most countries in the world. People in the US are 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 spendthrifty, I guess you can say, when compared to folks around the world. If you compare the savings rate of the folks in the United States with folks from other parts of the world, people in the US save the smallest percentage of their income. People in the US like to spend, and businesses around the world like that customer. Shopify reported revenue increased to 2.68 billion, up from 2 billion in the same time last year. Operating income increased to 291 million, up from 241 million, and free cash flow increased to 422 million, up from 333 million. All very strong numbers, including the GMV, which increased to 87.8 billion, up from 67.2 billion. Now, if you didn't already know, Shopify helps merchants set up and start making sales online. I use Shopify for the website for the sale of my book, and I find their services to be relatively easy to use for someone like me that didn't have a background in web development or web application. I'm able to use Shopify's website and do certain things on the platform I didn't think I would be able to do, but because they make their platform so user friendly, it's accessible to entrepreneurs like myself that don't have a background in web development. I am looking to enhance my website, so I am looking at different things that I can do. If any of you that are watching that have experience here and are looking for an opportunity, send me an email. I'm interested in some web development. Shopify free cash flow margin at 16% remained the same compared to last quarter, but the revenue growth rate jumped from 21% to 31%. For the third quarter, Shopify is forecasting revenue to grow in the mid to high 20% rate on a year-to-year basis. So this means revenue growth somewhere between 25, 26, or 27% in the next quarter. That would be a deceleration from the current quarter 31% rate. So Shopify does expect the revenue growth rate to slow down. It's still a good revenue growth rate amid this economic backdrop, but a slowdown from the previous quarter. They also expect gross profit dollars to grow at a low 20s percentage rate on a year-over-year basis, with the free cash flow margin to be in the mid to high teens, again 15, 16, or 17% in the free cash flow margin, which would be where it was in the current quarter. So no expansion in the free cash flow margin despite revenue growth above 25%. A little bit disappointing, but we're getting picky here. And as I've said before, I get picky when I'm looking at companies that are trading at a premium valuation, and Shopify is trading at a premium valuation. When you're going out to buy a Honda Accord, you're not very picky, right? You're just looking at a solid car that will transport yourself and your family maybe for a number of years at a relatively low cost. But when you're out shopping for a Mercedes or a BMW, you're going to get picky. The prices are a lot different, a lot more expensive, and you're going to want that car to have all the bells and whistles. You're going to want it in your color. You're going to want all the things that you like if you're going to pay that kind of premium price. Shopify is that premium product here. The stock is trading at a expensive valuation. Whether you're looking at it on a forward price to earnings or a price to free cash flow, Shopify is expensive. On a forward price to earnings basis, Shopify is trading at a forward PE of 95 and trading at a price to free cash flow of 105. So expensive valuations on a multiples basis. Similarly, when I updated my discounted cash flow valuation model for Shopify stock, it looked expensive. I upgraded and increased my intrinsic value per share after I upgraded the free cash flow expectations for the company over these next few years. I increased their free cash flow estimates for 2025, 26, 27, and still the intrinsic value per share is well below the current market price of $149 per share. The intrinsic value I calculated is $41 per share. Overall, I like Shopify's business prospects. It offers a great product in an industry that's poised to grow for several decades, right? Online shopping will increase as a percentage of overall shopping, and that's where Shopify benefits people the most, enterprises the most. It has a brick and mortar presence, but its main competitive advantage is in merchants or entrepreneurs looking to set up an online point of sales channel, whether it be a simple sales channel or if you want a more expanded, more comprehensive website. Shopify has the products for you, and that's where they excel. So as people spend more money online, more entrepreneurs will want to set up businesses online, and Shopify will benefit as a result. Additionally, some of its products are on a percentage of sales basis. So the more GMV goes to websites built on Shopify's platform, the more percentage of revenue Shopify will extract. All of that is great. It's just that the valuation already incorporates much of that positive development. So to update my recommendation for Shopify stock, what do I think? Is it a buy, hold, or a sell? I've had this stock rated as a hold all year long, and I updated that rating today, keeping it rated as a hold. I would look for a better price to get into Shopify stock. Hey everyone, so many of you have been asking about my investing strategy, and I'm excited to announce that I've written a book that's available for sale now that describes my 6-step investing framework for evaluating stocks. I've added the link in the description below.